We've talked about for 3 to 6 months now just how horrible the 2025 residential housing market is going to be. Again, I think we are going to do less than 4 million transactions, which obviously hurts mortgage, hurts real estate agents, inspectors, all of that, escrow. Also, it hurts first-time home buyers. It's just all kinds of bad, except for new home builders who figure out how to build affordable housing, how they can use their balance sheets to get rate buy downs, and you know the drill. But second, and most important for this channel, I hope you hear me, and more importantly, I hope you feel it and believe in yourself. 2025 is going to be the year of the investor. Now, if you're on this channel, you know that we don't do average deals. We don't do negative cash flow. We write disrespectful offers. We follow up. We do the work, right? That's what we talk about on this channel. And I believe it is my job to bring you examples of people in our community doing the work, because some of you don't believe me. Some of you don't think it's possible. So I want to shout out Owe and Ann, who have given us the latest example of a disrespectful offer for the win. Now, as all of these disrespectful offers go, there is lots of twists and turns and follow-up and whatnot. But hey, let's give you the 30,000-foot view of how Owe and Ann got a triplex for 43% off list price. 43%. Here we go. So there was a triplex originally listed for $425,000 in their buy box. They felt that that price was inflated. That property sat on the market for a year. And finally, the seller had a price reduction, a significant price reduction to $350,000. Owe and Ann saw that as an opportunity to strike. Owe and Ann said, you know what? We don't think it's quite worth $350,000. We think this seller probably has a decent amount of motivation. We are going to take our shot. Now, what did Owe and Ann do? Did they write an offer at $320,000? Nope. $300,000? Nope. $280,000? Nope. They wrote up the offer at $230,000. $425,000 for a year, lowered to $350,000. Their first offer is $230,000. It's wild that this stuff works if you do the work. Now, again, they go back and forth, and there was lots of follow-up, this, that, and the other. They ultimately negotiate $242,000. Owe and Ann bought a triplex for $242,000 that was originally listed for $425,000. Now, how could they do that? Well, they did the work. They followed up. They took a shot. They didn't negotiate against themselves. They knew their numbers, and they did the work. It is that simple. Guys, you have to do this a lot. It's no guarantee. You have to find a motivated seller. That is what 2025 is going to be. Transactions that get done will likely be because you have found a motivated seller who just wants out for any and all reasons. Again, believe in yourself, believe in the work. It takes time, repetition, all of those things, but it is possible. All right, what else am I reading? If you want to know about home price crash, yes, we do have some cities that crashed in 2024. You can expect some doomers to be talking about this. I'll give you the top five. The top five. Number 5, Tampa. Tampa, Florida, down 6%. Kansas City, down 6.9%. Austin, down 7.7%. Miami, down 9.9%. And the winner chicken dinner for biggest price crash, San Francisco, down 10.9%. Want to call attention to an excellent interview with Cody yesterday. Cody, if you don't know who he is a real estate investor who started at 18. He started at 18, put together lots of partnerships and whatnot, grew his portfolio to 200 by the time he was 24. Yes, Cody had more units than me in a 6-year period, which is awesome for him. However, what Cody has been doing for the last year is shrinking his portfolio. We go through lots of discussions why and all of that. We talk about upgrading his portfolio, reducing complexity, increasing cash flow. And perhaps the most amazing thing that I learned in my conversation with Cody yesterday was that he lives on $2,000 a month. His entire expense structure is $2,000. That is amazing. I know lots of people in the real estate game, and when they get a little bit of success, they start doing stupid things like buying Maseratis and new homes and second homes and all of those things. And if you do that, your chances of blowing up increase. But if you're Cody and you stay disciplined, you stay learning, you constantly are working and networking, and you keep your expenses low, life is easy. Life is easy. So shout out Cody for that excellent discussion yesterday. Got to get him back on the channel more. I think he has an amazing head on his shoulders, a great heart, and his discipline is something that I didn't appreciate until yesterday. So shout out Cody. We did get some earnings this morning. We're talking about McDonald's. McDonald's missed on top line, which means they didn't sell enough burgers and fries and Coke. They missed on the bottom line, which means they didn't earn enough money. And U.S. same-store sales down. They posted a negative number, negative 1.4%. Are Americans getting tired of fast food? Are Americans getting tired of high prices? Are they going somewhere else for fast casual? Don't know. But McDonald's posted an ugly number. Today, folks, you will get the Grant Cardone interview at 4 o'clock Pacific. Set your alarms. And again, this is actually a discussion that I wanted to have 3 years ago. As you will see in the opening of the video, Grant sent out I think it was an Instagram post asking small channels if they wanted to interview him. And I reached out. I was declined. The channel was too small 3 years ago. But you know what? I saved the questions. And I thought I would give you the questions here. If you know Grant's story, he starts with 2 single-family homes. And then his next purchase is an apartment building. But what is not often discussed, and most people miss, is there was a 2-year window between when Grant sold the houses and Grant bought the apartment. So I asked him, what the heck were you doing during those 2 years? And I thought that was an interesting discussion. Number 2, there was a time that Grant Cardone lived in Lionel Richie's Mac Daddy mansion in Southern California somewhere. And during the Great Recession, he had to sell it, or he sold it, and he moved into a hotel. He actually told me something I never heard before. He actually lived on a cruise ship for 3 months teaching real estate. So I want to talk about going backwards, right? There's a lot of people out there who set up their life that aren't going to go backwards. And I got to imagine selling a Mac Daddy mansion and living in a hotel or a cruise ship is not a step in the right direction. So I want to talk about why he did that. How was it? Was it important? All of that. And then finally, I don't think you can argue Grant's work ethic. Again, you can argue lots of things about the guy, but he does work a lot. But what I asked him is, I thought, having watched him for a long time, he has evolved. He's kind of like I don't know of a better analogy, and he actually makes it in the video, about being a snake. And what I mean by that is he sheds his skin, and shedding the skin is painful, and it just shows growth and all of that. So again, I thought that was a very interesting discussion. So if those questions interest you, you will find the video at 4 o'clock as he was very gracious to go through those. Don't know if you have a penny, but according to Trump, he has instructed the Treasury to stop making the penny. Now, I don't know if you know this, but I did do a quick Google search. Apparently, the cost of a penny to make is actually 3 pennies, 0.69. So 3.69 cents. So we are losing $2. We are losing 2 pennies, 2.69 pennies to produce a penny. Sounds wasteful. That said, I do wonder what the updating of all of our software and systems might be if the penny really does go bye-bye and we don't make them anymore, right? Because I worked in retail from like 13 to 20 or something when I was in college. And I think about all those cash registers and all that software and all those things that go to the penny. I don't know. That's above my pay grade, but I wonder what's going to come there. Looks like there are some potential tariffs coming on steel and aluminum. It said it was coming today. It is interesting to kind of play that out. I think there's a couple of things that happen. Number one, in the short term, you will undoubtedly see a demand drop, right? Demand will drop because it's more expensive. This is simply supply and demand. If it costs more, people will demand less. But second, if the tariff stays in effect for a long enough time, you will actually see investment in domestic aluminum and steel production. And I don't remember who it was. I think it was Nucor. I think maybe it was U.S. Steel. Maybe it was U.S. Steel. I don't remember. One of those. Wasn't there a Japanese company coming in trying to buy one of those? Well, now if you have more investment in domestic production, maybe that acquisition doesn't happen. I should have looked that up. I didn't. I don't know where that stands. But again, it's a bigger picture of what's going on. Also, if you're going to look at who is the largest exporter of steel and aluminum, it is Canada. So this tariff, which appears to be potentially worldwide, would really hurt Canada, especially if it stayed in existence for a while. We do have more earnings coming. Again, remember, McDonald's was this morning. We got Coca-Cola tomorrow. Cisco, Reddit, and restaurant brands on Wednesday. And Thursday, we get Airbnb and Coinbase going. So that should be fun. Couple more things. I got a lot of stuff here. Let's do a couple more. Oh, let's talk about America's largest apartment REIT. This apartment REIT is MAA. They have over 100,000 apartment units, mostly in the Sun Belt. What did they say on their latest earnings call? Well, they said that new supply is driving new lease-up rates down 8%. Again, remember, folks, when you look at CPI, at least in the last reading, we get a new reading this Wednesday, rents are still up 4.6%. Again, according to the largest landlord or largest owner of apartments, REIT, rents are down 8%. So again, CPI is not reporting the correct number. Next, they talk about expecting 2026 to be better. Now, why are they saying that? Well, basically, they're saying that rents are down 8% because new supply is coming online. They point out the fact that there's nothing coming behind this new supply. There's not even plans to build behind this. So again, we're delivering product now that was already set to go. It's causing rents to go down in 2025. 2025 is a good year to be a renter, right? Rents down. But they're like 2026, 27, 28, no supply, no plans on supply. It is going to change and change quickly. To that end, MAA is doing a new business model, something they have not done because they see what's coming. They're actually going out and buying apartment buildings in the construction phase, in the lease-up phase. Now, why are they doing this? Well, it's essentially what Ken McElroy is doing, right? They are trying to find builders that are in that lease-up phase. They haven't gotten to 90% occupancy, so they can't get out of their construction debt, which is eating them alive, I am sure. So what they're trying to do is come in and say, hey, I can take care of that problem. I can put on permanent debt, and I will own leasing it up. Now, why would they do that? Because, again, they know there is short-term pain and long-term gain. There's nothing coming. There's no plans for building. So it's going to be years. On that topic, something totally different that caught my attention today. Gold shoots up over $2,900. I think it was $2,930 last time I checked. I'm curious, what is going on with gold? Let me know in the comments below. Is it an inflation hedge? Is it a safe haven for government spending? Is it hopes of a gold reserve, the dollar being backed by the gold or whatever? What is going on? What is sending gold to the moon? I would love to hear from you. Last thing, we'll talk about jobs data. Jobs data came out on Friday. I did a little bit more research. It looks like wages are up 4.1%, which is a good thing. But hey, let's talk about real versus nominal wages. Well, if you take out an inflation reading of 2.9%, you actually have real wage growth of 1.2%. During the pandemic, folks, there was years where real wage growth was negative. So we now have, at least in the short term, let's hopefully it continues, real wage growth. Folks, that's what I got for you. If you're watching this and you haven't subscribed yet, hit that subscribe button, hit that like button, leave some comments. Let's get the YouTube algorithm loving on one rental at a time. I would appreciate it. And again, folks, let's congratulate Owie and Ann for showing you that disrespectful offers work. You got to believe in yourself. Stop this. It doesn't work. It doesn't work. If you believe that, you're right. But 2025 is going to be the year of the investor who does the work, writes the offers. If you want to ask Owie or Ann about that, they are in our school community. You can reach out to them. Maybe they'll post something. And look forward to seeing them in Vegas. I think they're coming to Vegas this weekend. Can you believe our event is 5 days away? Yay! Lots of work. All right. Take care. Later.